Hello, I'm Michael Glass from michaelglass.com, where we make informed decisions about our financial future. This is our Forex technical analysis video update. Before we begin our video, we always like to start off our disclosures. Any symbols that you see today should not be inferred as a trader recommendation. No matter what form of investing you choose, stock, forex, futures, option, they all have a level of risk associated with them. You can lose all of your money. Any strategies we show today are for informational purposes. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our Forex technical analysis video update. In each of our videos, we will review the prior session's price action to come up with key support and resistance price levels. We'll look at the crude and gold charts to come up with leading sentiment. We'll come up with a low volatility watch list, an inside bar watch list, and we'll have an economic calendar update to see what could affect our future and open trades. And finally, if there's time, we'll have an education spotlight at the end. Let's pull up the charts. As we start off by looking at the week that was and looking to see what's going to happen next week, the first thing we're going to discuss is the euro. Now, last Friday, we had the Euro Summit produce what should have been positive information. They finally found a way to stabilize Italy and Spain's debt, yet the euro is down 2.5% against the dollar. It was supposed to be proof to the pudding that the euro leaders could come together and work together for some good, actually can get through the bickering and solve the euro crisis. In addition, this week on Thursday, we saw the ECB announce a cut to interest rate. But what we also saw was the German finance minister speak on Friday saying that there will be conditions to these bailouts, meaning they're not just going to give all of these countries the money. These northern countries in Europe are still holding austerity requirements towards the money. So although we had this breakthrough with the European Summit, we're still seeing that there's still going to be some concerns about the European debt crisis. We also saw this week the central banks coming to the forefront. As I said, the ECB cut rates, the Bank of England cut rates, and even the Public Bank of China cut rates. And not only did they cut rates, but they cut rates twice in the month of June. And their first cut was the first one in 4 years. All trying to stem off what's probably going to be some weak data coming out this month from the China economy, including their GDP that's coming out this week. So, with all those other central banks joining the party, what will the Fed do? At the last meeting, the Fed did basically nothing. They didn't expand their portfolio, and they obviously, they can't cut rates. Rates are as low as they can be. But we had yet another weak jobs number here in June, 80,000 versus 100,000. For the second quarter, we averaged about 75,000 jobs created per private sector jobs, whereas in the first quarter, we're averaging over $200,000. So what will the FOMC do at the meeting at the end of July? So that also brings us to what will Japan do. They have a meeting scheduled for Friday. They've already done a lot as far as expanding their portfolio. So what else is on their, in their bag of tricks? We'll have to see. Let's pull up the charts and take a look. We are going to start off by looking at our sentiment leaders of the dollar, gold, and crude oil. And the first thing we'll see is our dollar here trying to make or reach our past high here in June. So we've broken out here again. We did get our double bottom and a really nice strong week for the dollar. And of course that's interesting because again, weak jobs number, strong dollar. And you would think you wouldn't see that because the weak job numbers may finally motivate the Fed to quantitative ease, which is print money, which weakens the dollar. So it's interesting to see the dollar have a strong week off of that, leading into that news. So again, here we are looking at retesting this past high. What I want to do is go ahead and zoom out one more time. Actually, instead of zooming out, what we'll do is we'll go into our weekly. See if you see anything there. Well, look at that. The 500 moving average is coming in here. And this past swing high here from last month matches up with this little swing high going right in here. So I will go ahead and we'll use that as a price level, even though it's not a lot of distance from our last, what is now support, which was once resistance, and then we'll go back to our daily and say again, that's what we're watching. So 83.67 is our next target. After that, we're really going to have to start looking at probably 84. 84 looks like the next way to go after that. We'll go out to the monthly just to see. Monthly, we got to go all the way up to 86. So monthly is probably not a good gauge for that. We're probably going to have to go back to that weekly. All that being said, the dollar strong. What about gold? Well, gold is going to look very much like the S&P 500 chart. From the standpoint of we've had this downtrend line that we're watching. And once again, right in here, it's panning out. Fell off here. Sort of a wedge potentially going on here. A range, 1540-ish, 1530-ish, up to 1600, even 1640-ish. We also said, look at these wicks. This is what we said last week. All this consolidation in there is where we're failing once again. So again, very range-bound market the past couple months. We'll see what we'll get from there. But gold sideways. Finishing off with crude oil, which rallied a little bit. I drove up to Virginia this week and saw gas under $3. That was nice. And we fell off here at the end of the week, but now we're looking at a range of $90 to $80 for the past couple months. Crude oil definitely sideways. So let's go ahead and start off here by looking at the euro-dollar daily chart. And one of the first things we'll see is that negative reaction to the jobs number here on Friday. You think that we would actually have seen this move up, but it went down with the dollar. So just seeing that, as they always say, I love it when a line comes together. So it's interesting to see this rally come right up to this last wick right here. You can see, though, for the past couple months, we are sort of in a range. We fell out tremendously. And now for the past month or so, we've been in this range between 1.23 and 1.26. So we're sideways to down, really. 50 moving average acted as resistance several times. Of course, our indicators are trying to get oversold again. As far as the states, we have earnings season starting this week, but not sure what that's really going to do with the dollar or the euro. And of course, we're starting to see a little bit of momentum here to the upside off of this end of the day somewhat rally here on Friday. But overall, again, long-term downtrend, short-term sideways to down. Definitely going to have to watch for some more weakness here on the euro dollar. Switching over to the pound dollar, which usually mimic it, but the pound dollar is a little bit stronger. We'll go ahead and zoom in a little bit here. All right, so likewise, we see that fall off on the pound dollar, and we have a much wider range here, just below 1.53 up to about 1.58, moving sideways, coming down to potentially a little support here we might find here at 1.54. But again, really in the middle of nowhere. So long term in a downtrend, short term in a downtrend, sideways right now in the middle of nowhere. This is buying or selling in space. What about the dollar franc? Spelled it wrong. Here we go. Of course, we want to zoom in, and come up and take a look. Here we see the exact opposite. I was working with a client on Thursday, and he was saying that, well, I noticed that the dollar goes opposite of the euro dollar. The dollar franc goes opposite of the euro dollar, and of course I explained to him it's because of the base currency. Here the base currency is the dollar, euro dollar. The base currency is the euro. So here we came up, found some support here in the 50 moving average, and now we're retesting the highs here. So what I actually want to do is go ahead and zoom out a little bit. Let's go out to the weekly. and you'll start to see a couple things. First, right here, and this is where the high is, where we're at right now. And you'll notice that there are some wicks there. So we are in an area of resistance. Even though long term we want to hit this 200 moving average and get up to 1. Short term there is a resistance price level that we can match. And you'll see again there's these little wicks in here. So I'll draw it in for you and zoom in for you, and you'll see that's exactly where we are right now. So we're at a point of resistance. Will we break through and run up? We'll have to wait and see. Switching over to the dollar franc, we can see really a real obvious channel that we're in. Support down around 75.92, resistance up here around 85, just below it, 84.5. And once again, we're seeing we're really in the middle of the zone. You're buying or you're selling a space. Sit on hands at the current time. Last one we're going to look at is the Aussie dollar. And we'll zoom in just a little bit here. Too much. And you'll see something similar. We are also in the middle of a range. You could go in here, draw a little support here, somewhere around 96, somewhere in there. Resistance up here somewhere. And again, you can see we are, for the most part, in the middle of that space, right below the moving averages here that could act as resistance. You can see our indicators also in the middle of nowhere. So this is another one that I would recommend we sit on hand. Long term in the uptrend. As we come to our two watch lists, first our low volatility watch list, which is our 1 hour time frame using Bollinger Bands. You see that we don't have any candidates. And also for our inside bar watch list, which is looking at the range of today, comparing it to the previous day, Friday to Thursday, we also do not have any inside bar candidates. So we've been talking about our do you have a plan, and that's what trading is all about. You have to have a purpose for trading. And so I want to narrow it down. Last week we talked about generally, you got to have a trading plan. But also for each trade you have to have a plan. You have to, and that plan is what gives you an edge. It's what levels the playing fields. In fact, it puts the odds in your favor. Knowing where you want to get into a trade, what's your target, and where you believe the trade no longer works, it has gone wrong, is important to you being a consistent, profitable trader. Otherwise, you're trading the trade, you're not trading with a plan. What's your plan? Do you know where you're going to make your profit? Do you know how much you want to risk? Do you know that your profits outweigh your losses? Do you have a plan? Do you have an edge? As always, we want to thank you for watching the videos, and you can like and subscribe and be a part of our process. Let us know what you want to see. And we've narrowed it down to two things. I told you last week we had a big announcement. Of course, we still have our coaching program, but also we've been asked for years, and we finally put together a Forex newsletter that's going to give you the signals you need to be a profitable trader. High probability trading setups, specific entry targets and stops. Sign up now and really see your trading go to the next level. But more importantly, you get the same quality, you get the same knowledge, so that you are able to discern no matter where you get your signals, from us, from someone else. You have the trader's mindset to know that this is a signal good for me, for my bank account, for my risk tolerance, and you'll have the psychological capital to pull the trigger on those signals, whether you get them from somebody else or by yourself. You have to have the trader's mindset to enact a trading plan so that you have an edge that you can trade day after day after day. Thanks, guys, and I'll see you next time.